Hello, everyone. Welcome back to the Switch Markets live webinar series. I'm Shane Vernier, and this is the 9 EMA trading strategy. We're going to show you how to set up the 9 EMA, how to interpret the indicators, and also how to do some live action scalping. We're going to do some scalping on short time frames to illustrate exactly how to execute these trades. Remember, if you're scalping very, very tight time frames, it's going to be a high-risk endeavor. So this is one of those things where we're looking to take an abundance of trades and establish a bit of an edge, as opposed to maybe a swing trading strategy or a pure day trading strategy, where you're looking to establish a much, much bigger edge in fewer trades. So that's what we're looking at today. We're going to be scalpers. By nature, I'm sort of a scalper. I like to get into the markets and get out of the markets, but I do that in a much, much different fashion than using indicators on short time frames. The biggest thing to remember is when we go to some of these short time frames, and we're going to get there, is that the price action on short time frames isn't nearly as reliable as the price action on longer time frames. It just isn't. And the concept is real simple. Think about a 4-hour Euro USD price bar. Think about a 4-hour candle. Now that candle shows us the high, the low, and all the action that occurred over a 4-hour period, given one of the most popular pairs in the world. Now think about a 1-minute price bar. A 1-minute price bar is going to show you all the action, all the buyers and sellers inside of 1 minute. It's going to be a much smaller sample set than 4 hours, and it's going to contain much, much less information. So if you're going to be a scalper, understand that you're going to lose a lot of trades. Yesterday, we did some scalping on the FOMC. Didn't go real great. That's sort of the discipline. You're going to be in those trades where you're going to lose, but if you're a scalper, you're looking to take small profit targets over and over and over again. You're going to execute a ton of trades. So that's what I want to get done right off the bat, is talk about what scalping is. The advantage is you don't have much risk. Your profit targets are low. Your stop losses are low. Your leverage is probably going to be reduced because you're going to take an abundance of trades. That's the advantage, is you're not exposed to the systemic risk that we've seen, especially with the news cycle over the past, I would say, year, 2 years. But there's a big trade-off there. You're going to have tight spreads. You're going to have great fills. You're going to have the discipline and the stamina to trade all day, every day, and execute these trades. So scalping, everybody wants to be a scalper, but nobody really knows what it takes to be a scalper. Now, you can automate systems and let the computer do it. That's a talk for another time. But if you're talking about sitting down and being a trader, and you're going to do it from a discretionary standpoint, well, if you're scalping, it's going to be sort of a tough go. That's why we're going to introduce the 9 EMA strategy. We're going to show you how to add some confirmation to that and execute the trades, set your stop losses and your profit targets. This is a great time for questions. Any questions at all, be sure to ask me during these live webinars. I love doing these and interacting with the traders and doing my best to help. It's good to see Andrea Garwell. Good to see Andrea. Welcome. Big time moves. We've got a couple of active trades going for Fibonacci retracements. I'm going to recap those tomorrow. Our Great Britain pound Australian dollar starting to look a little better than it did. And then also our Great Britain pound USD. A little bit of pressure on our support zone, but we're going to give that time to simmer. Before we get started with the webinar, Core PCE price index is out tomorrow. That's going to be huge. We're going to do a nice market scan tomorrow about this time. And we're going to talk about the weekend news cycle. We're going to talk about the government shutdown, if it's still going, the EBT expirations, what we're expecting November 1st, what we think can happen moving forward. We're also going to recap Trump-Xi in the meeting and some of the trade deals that were I don't know if it's a trade deal or more of a trade truce. We're going to talk about that. We're going to recap that all at the end of the week. I think that's a good time to do that tomorrow. Get you prepped and ready for next week as we drive deeper into Q4. All right, without further ado, let's go ahead and get rolling here with the 9 EMA strategy workshop. Now, remember, if you want to trade any of these ideas, head on over to Switch Markets. Bring your ambition into focus. Thousands of global markets, fast and easy deposits, reverse KYC program, contact live support. You just give that a click right there, and they're 24/7. They'll go ahead and help you out. And then the last thing is all of our free trading tools that we just put out. You just go over there to resources, and you just cursor down EA tools for traders, free trading journal template. That's one we just put a YouTube video out on today. If you want that download, head on over there. Forex mover stocks, cryptos, free trading tools, view all trading tools. There's an abundance of tools here. If you're interested in getting involved with maybe a lot size calculator, a profit calculator, an economic calendar, a currency strength meter, a market heat map, a Cager calculator, Forex compound. They've got all these calculators, all these tools, free library of cheat sheets. Pretty much everything you need to get up and rolling there with Forex trading is over there at Switch Markets. So if you're interested, be sure to take advantage of some of those free resources. It's pretty good. Okay, this is the 9 EMA trading strategy. This is one of the biggest videos that we put out over on the How to Trade Com YouTube channel. This one has hundreds of thousands of views. A lot of people really like it. A lot of people don't. I'm going to show you exactly how to execute these trades in the live market in real time. And I'm going to show you how to set up the indicator itself on TradingView and MT5. And then we're going to go ahead and dive into what we think is going to be a pretty good trading day. I see enough volatility maybe to make a few of these trades go. Right now, the NASDAQ, though, getting smacked a little bit. Gold's up. Well, gold's up big. Silver's up big. We talked all about getting long gold. Pretty good opportunity yesterday off of that sell-off, and then also crude oil's hanging in there. U.S. dollar showing a little bit more strength today. We saw a hawkish Jay Powell. I'll recap that tomorrow as well. All right, so here we go. This is what we're going to do today. I'm going to set up the 9 EMA on TradingView and MT5, show you how to do that. We're going to do some live trade executions, and then potentially, if we have time, I'll talk a little bit about improving your entries with Fibonacci retracements. But all in all, it's going to be a fairly basic tutorial. If you have any questions at all, be sure to ask. Okay, here's a good look at your trading view. This is a 4-hour chart for the Euro USD. The first thing that we want to do is get our 9 EMA up and rolling. Now, what a 9 EMA is it's an exponential moving average with 9 periods. Remember, the exponential moving average, the EMA, it puts more emphasis on the most recent price action. So you're essentially weighting the price action that's closest to the current time. That gives us a much more sensitive moving average than, say, a simple moving average, where you weight all the pricing data within the given periodicity the same. So if we're looking at the Euro USD 4-hour chart, we're going to go up and click indicators. We're going to go right up here on TradingView, come down to moving average, and you'll see it right here in a second. There's the moving average exponential. Go ahead and give that a click. Now, what do you have here? You've got the 9 EMA. Let's go ahead and take a look at our settings. Personally, I prefer red because 9 is sort of a short time frame, and it's what I call a hot EMA. It's really it's one of those that is going to be very sensitive to really short-term movements, and that's one of the reasons why we're going to use it to scalp. Now, 9, the length is 9, your input's 9. The source is the close. That means we're going to go off the closing value of the price bar, and then right here, smoothing. We don't want anything. We don't want any offsets. We're going to keep this as simple as we possibly can. This strategy is designed to be simple. Now, I'm going to give you some tricks on how you can be more effective trading it. You can't just go in with a 9 EMA and say, okay, I'm going to trade, I'm going to go trade hamburgers at 3 o'clock in the morning somewhere. You've got to know what to do, when to do it, and we're going to cover that as well. That's the nuance of this strategy. But the setup, it's as easy as it gets. There's your 9 EMA right there on the chart. Very, very simple rules to entry. We're going to cover those in just a second as well. Let's go on over to your MT5 platform. A little bit more involved here. You're going to go up to insert, go to indicators. You're going to go to trend. They have moving average as a trend indicator, and you're going to go ahead and give moving average a click. And you'll see right here exponential. You're going to have to go to method. You're going to want exponential right there. And then your period, you're going to go ahead and dial that in as a 9. Once again, I prefer red. You can pick any color you'd like. Just make sure that you remember what it is. And I also like thicker lines because it gives us a little bit better visual on the live stream. So there you go. Exponential, apply to the close. Remember, you got all these options. Close. Easy. It's the most basic way to do moving averages. Most folks, when they're swing trading and things, use the daily close. For me, I use the mid. That's a conversation for a different time. And let's go ahead and give you the okay there. There's your moving average. Okay, so this is very simple. I mean, what are your rules to entry? I mean, what are really your rules to entry? Piece of cake. You're basically looking to buy when you get a close above the 9 EMA, and you're looking to sell when you get a close beneath the 9 EMA. Very simple. So on this 4-hour chart right here, let's say we started trading yesterday morning right around the U.S. Open. That would have been your buy signal. Okay, so you'd have bought the market right on that bar close above the 9 EMA. Now, what would your trade have looked like? Stop loss location is absolutely imperative that you understand where to put your stops. Your stop loss would have been beneath that previous swing low. I'm a big believer in that. I don't put it right there though. Don't be sort of. I always say don't be a pork chop. There's an old saying when you're in bear country, you don't want to ever. It's like this. If you put your stop loss right here, right at the bottom of the bar, or maybe there by 1 tick, I call that being a pork chop, because when you're out hiking in the woods and there's grizzly bears around and cinnamon bears, black bears, brown bears, you don't go hiking with pork chops around your neck. You don't act like food. Don't act like food. And believe me, there are stop hunters out there. The institutions will run your stops. We've seen it way too many times to deny it. A lot of folks still argue with me. Believe me, everybody in the world can see a swing high and a swing low. What we're trying to do by combining this stop loss location with the 9 EMA itself is we're looking to get in on a momentum move. That's the idea, pure and simple. And in order to do that, we've got to give our trade a little bit of room to work, but we also have to bail on it when it doesn't work. And right here's a great example in this Euro USD 4-hour chart. Now, this is a long time frame. You could scalp using this, but we're not going to. We're going to be down on 1-minute charts here, looking at some futures, maybe even some 5-minute charts here, looking on our Forex pairs. But so right here is going to be your long. There's going to be your stop loss. You always need to pad it by a few pips. Like I said, if you're right there on the bottom of that bar, there by a point, you're waiting, just begging to be made an example of. Give it a few pips to work. I like to look for key levels. There's a key level right there, 116.18. I'd be probably looking, 116.13 is not bad. Just go ahead and stagger it a few more pips. Now, what happened on this trade? If this is my entry right there, we bought because we broke above it. I'm looking at my stop loss being somewhere down in here, okay? What am I going to have to do? I always preach you have to get at least a 1-to-1. At least a 1-to-1. If you're not getting at least a 1-to-1, then you're not really trading in a very astute fashion. You've got to at least get a 1-to-1 risk versus reward. Now, a lot of folks on these trades especially, they love the idea of getting in on a trend. They love 1-to-2s at least. I don't care what you do. Personally, if we're going to scalp, I'm shooting for 1-to-1s. I want in and I want out. That's all there is to it. Tina, good to see you. Tina, welcome. I want in and I want out. So if that's the case, then I'm going to have to build trades that make sense. Is a 1-to-1, 1-to-2, 1-to-3, 1-to-4, is it really a scalp? No, it's more of a position. Okay, we want to scalp. We want to just pick up a few pips here and there, and we want to add them all up at the end of the day and be in better shape than we were when we began. That's the idea. So in this type of environment, I would be shooting for, say, a 1-to-1, and on a very, very tight time frames, that could be as little as just a few pips. It could be as little as a few ticks. It just depends on what the trade dictates. So that essentially is what we're looking at. Now, the other way that you can do this is you could go off a market structure. All right, so you could say, okay, I love this liquidity sweep right up here. That's going to be my profit target that we revisit that. And I would say, great, that's fantastic, but you're not really scalping. What you're doing there is taking positions and you're trying to get in on a move, which is fantastic. I mean, take a look at this trade. You lost right here. You lost. But the beauty of this type of a strategy, especially if you're on short time frames, okay, we're in, we lost. But where are we here, though? We're right back on the horse. We got stopped out here, bar closed here, we're short, and now what? Now my profit target's up here, and now my trade's going to look how? We're going to look to get in on some real action to the downside. Stop loss is going to be right up here. You could put it right above this swing high if you wanted. That's a little more aggressive. I'm not going to be a stickler. Let's just put it right there. Your scalp, 1-to-1, cashed in easily. So on those two trades, what are you? Are you profitable or are you not profitable? It depends on your stop loss location and how bad your first loss was. But realistically, you're pretty much 1-for-1, so you should be in pretty good shape. But remember, the trades will vary according to the bar ranges. All right, those are your entry rules, and that's how you build these trades. Now, it's always a lot easier for me to show you how to do this live. So let's go in on the prowl and see if we can find a couple of these trades. Now, when we scalp with a 9 EMA, we need a little more evidence. Okay, let's take this down, and I'll show you what I mean. Let's take this Euro USD down to a 1-minute chart. Let's remove all the drawings. Periods like this, you can be in big trouble. You can be buying here, and then maybe you're holding this long, and then what you're here, and then you come down, you get stopped out. Maybe you're looking to sell, then you're buying. When the market flattens out like this, you really get chopped up. When you start getting into situations where the market isn't making decisive moves, it's really difficult to trade this type of strategy. It really is. So what you've got to do essentially is you've got to have a qualifier. You've got to have a way to spot the market that tells you when you should be trading. I use RSI. Now, I've used RSI a lot. Most people that have watched any of these webinars see that RSI is pretty much a confirmation tool that I like to lean on, especially with moving averages. And the reason why is it gives us a good opportunity to see maybe if a market's in overbought or oversold territory. So let's go ahead and add RSI and talk a little bit about confirmation. Trading view, you go up to indicators, you're going to go down to relative strength index, which is going to be right here. Go ahead and give that a click. Now, once again, this is going to come up as a window, a separate window. That's the way that I like it. You can get it as an overlay. I like it as a window. Now, the biggest thing to remember about RSI, it's like an envelope for prices, 70 and 30. Anything above 70 on your RSI is going to be what? Overbought. We're going to look to sell. Anything beneath 30 is going to be oversold. That's what we're going to look to buy. All right. In overbought territory, We're looking to sell when? When the market breaks beneath the 9 EMA. That's our trigger. This is what sets the stage. It opens up our view. We're looking to make a trade. What gets us into the market? The relationship of price to the 9 EMA. That's what's key here. On short time frames, I highly, highly, highly recommend waiting for confirmation before you execute these trades. Now, right now, Euro USD 1 minute chart. What are we looking at? We've got price sort of creeping down. We've got an RSI reading of about 30. We're just a shade, 30.18. We are just a shade above our 30 level. If we dip beneath that, then we're going to look to take the trade. Now, one last thing I want to talk about the RSI settings. I get this question a lot. Shane, what about the inputs of RSI? If you're an RSI specialist and you understand what it is, and you feel like you can move around the periodicity with confidence to give you a better reading, go for it. I'm never going to eat your lunch for being creative, ever. If you say, Shane, the best RSI length is 22 and the source needs to be the mid, I say, go for it. Go get him, Tiger. I'm on your side, believe me. For the intents and purposes, for our purposes, we're going to leave it on the factory settings. James Wilder was an actor. Wells Wilder Jr., the guy that invented RSI. These are the stock settings, 14 in the close. That's it. So the RSI length is 14, and we're based on the close. Okay, right here. Now, we're going to show you how to add RSI here let's see, MT5. We have about a minute. Let's go ahead and do it. RSI over here, you're going to go to Insert, Indicators, Oscillators, and you're going to go right down there to RSI, 14 close, Dodger blue, and then there you have it. So that gives you a good look at how to do that on MT5. Let's get back to our trade here, though. We've got an opportunity potentially to get a trade idea. Now, this is a 1 minute chart on the Euro USD. We're going to go ahead and look at this. We are beneath the 9 EMA. That signifies that price is trending south. Okay, we are in oversold territory. Price has now dipped beneath that 30 level. Now we're looking to get a comeback. What gets us into the market? A bar close above the 9 EMA, and then we're pulling the trigger and we're going long, and that's going to give us a good look at our trade. So right here, we've still got the trade developing. I would love to get the buy in the next minute or so. That would really help us out because it'll illustrate exactly how you need to execute this trade. Now, there's a couple of things that we do need to understand when we're trading a system like this or a strategy like this. Number one, we want obvious closes. If this thing closes right on the 9 EMA, I'm not doing it. I'm not interested. It's got to be above it. Now, it doesn't have to be like this, a huge breakout beneath it. That's not what we want. But we want something like this right there. That's what we want. Nice close. It's definitive. It's not on the line. And we're just waiting to pull the trigger and execute. We're going to execute right on the bar close, and that should get us an opportunity potentially to take a trade. And this looks like it's happening. Look at, if you can see it on your live stream, I know it's not overly big. Okay, we've got sort of our buy already sort of locked in, but as you see each pip or each fractional pip go by here in this Euro USD, you'll notice that 9 EMA reacts to that. See that? It's always changing. That's why it is imperative that you do not guess. You don't guess and go, okay, well, this one's going to close above the line, so I just want to get in right now. You cannot do that. You've got to wait for the close. This is where patience comes into view because a lot of times your 9 EMA or any EMA that you're using acts as like a resistance or a support level. Look at that. That was almost beautiful. You almost should have sold up there and grabbed the money to the downside. Now, 1 minute Euro USD chart, this is very, very, very tight. I mean, we're talking about just a few pips here, but it is pretty instructive of how we can execute the trade. Right here, we're still working right down in here. We were in oversold territory. We're still working a buy here. So we're going to watch this here for a few minutes, and then we'll switch over to the futures contracts and see if we can't get a trade if we don't get one relatively soon. I'm way behind on the live chat. So T. Marina, good to see you. T, welcome. T. Marina, hey, Shane, I joined late today. Can you tell me, is it better to use the 9 EMA or the 20 EMA on the daily? Is there an advantage to using one over the other? For me, I like crossovers on the daily. I like crossovers. That's a very traditional way of looking at the market. Typically, we talk about golden crosses and death crosses, the 50 and the 200. That's a real traditional way of looking at swing trading, daily charts, especially for stocks. For me, if I was going to use probably a moving average combo on the daily, it would be a 920 crossover. That's what I would be looking at. We've got into a lot of really good swing trades doing that. And right now we've got a natural gas trade that's starting to take off that we put out Monday, that 920 EMA breakout. Those are working pretty well. I like that. If you were just going to use one EMA on that time frame on the daily, I use 13. Okay, here we go. But you could definitely use 9. 9's doable. It's versatile. I don't know that I would use 20 because it is kind of it's a longer duration, but you can do it. Okay, so are we going to have an opportunity to trade here? 3, 2, 1. Am I going to take this trade? It's above the 9 EMA. Let's send them. Buy. Okay, we just bought the market. Take profit. Where are we going to be? First thing we do is we put our stop loss in. Stop loss is going to be beneath that swing low, especially if I'm working on a 1-minute chart. Now, we've got to get up there and we've got to get at least a 1-to-1. So, ignore my leverage. My leverage is just sort of like yesterday we had huge leverage. Today we got little leverage. This is just a very small position. This is a trade that a lot of scalpers would look at and say, you're only doing it for $20. Yeah, but maybe I'm taking 50 of these a day. It adds up. Okay, so right here, here's our trade. This is what we're doing. We're in the market. I mean, we should be in the market. We should be long right in here somewhere. Put me in right there. Just give me long. Well, I mean, did it do it or what? In any case, it set us up with a limit. In any case, you can see what's happening here. Buy. Let's just go market. Get me in. Okay, so it got me in up there. That's fine and dandy. So your stop loss is going to be the same. We're going to put it right beneath this area right down here. So that's going to be what, 33? Now my take profit is going to have to be what? It's got to be at least a 1-to-1. So we're going to shoot for a 1-to-1. So that right there's our trade. Remember, I made a mistake on the entry point. You need to be using market orders here. It is difficult. I'm not going to lie to you because you're going to have to overcome the spread, especially in Forex pairs. And I mean, right now, the Euro USD, we're looking at a 1.6 pip spread on this demo. That's ridiculous. We should be able to beat that. That tells us that there's not much action or volatility, or not volatility, but liquidity in the market. So right here, what are we really looking at? If we're scalping, what are we looking at? My stop loss is at 1560. I just bought 1563s, and I'm looking at 1566s. This is a 3-pip play. This is scalping. And you're saying, Shane, I mean, it's kind of long for scalping. I go, remember, scalping's more of a function. Of course, you want to get in and out early. You want to be doing this when the market's at its most liquid, typically during that London U.S. overlap, that London-New York overlap. But if you're in a position like this, is a 3-pip to win 3 pips still a scalp? I would say yeah. I would say absolutely, because you're very, very, very tight. It doesn't get much tighter than this. You've got to be aware of that. So my stop loss location, you'll notice we put down here 1560.1. That low's at 1564. Let's go ahead and move that down just one more pip. Let's take it down to maybe just underneath there, maybe 15.5, 59, something like that. And let's go ahead and take this up at a 1-to-1, and that should give us our trade. There's your trade. Is this the best time to be doing this on the Forex? No, we're going to go to the futures contracts because I want to see some action. But this right here, that's a viable scalping trade. Now, what's the beauty of this with a 1-to-1? The beauty of this is you only have to hit 51% of your trades. Let's say a little bit more. Let's say 52.5 or 55% of your trades to establish a profitable approach. Personally, I want to figure out exactly when was the best time to do this and how to execute it. And I'm looking to hit 60 or 70%. That's when you really start to excel as a scalper, when you've established a 10, a 15, a 20% edge over time. Then you're cooking. Then it's just a matter of just getting the money down, trading as much money as you possibly can and applying your edge. In essence, that is the law of large numbers. That's why you go to casinos and all the blackjack tables, as long as they're full, the house is making money because they have an edge. They have a 1% edge or a 0.5% edge. I believe they have a 1% edge depending on the rules. Maybe 1.5. I don't remember. I haven't been to the casino in a long time. But that's the idea. And when you're a scalper using something like the 9 EMA with confirmation, that's the idea as well. Establish a small edge and apply it over and over and over and over again. And in doing so, you generate a solid profit curve. What we're looking for really is a 45-degree profit curve. You're not really looking for this. If you're a scalper, think about it. As a day trader, a swing trader, you could get big peaks and valleys. As a scalper, you want to be laying down enough trades to where you're making incremental gains, every day, every week. That's what you're looking for. Taking enough trades with a small edge to where you secure profitability. That's what a lot of the automated traders shoot to do. The big challenge is putting these things on at the right time and being able to execute. Right there, you saw the slippage. just with the spread. That spread can be tough to overcome, especially in the Forex pairs. We're going to move on to some futures. To be honest with you, I'm getting bored watching this trade. We could be here all day waiting for this thing to move, but our buy is still on, and we're still alive and kicking. We're going to come back to it. Okay, let me see. I'm way behind, guys. Can they make an algo? But let me see. Tina, can they make an algorithmic program to let EA do this? Absolutely. Absolutely. You could easily program this. I'm working with a few things on Algo Builder, the Switch AI thing. I'm working on a few things with this. I know that we can code it. I know we can use AI to code it and at least give us signal bars to when we should be trading. The biggest challenge you're going to have is getting your platform to evaluate both the RSI and the EMA at the same time, but I think it could easily be done with just a little bit of effort. Maybe I'll make a video on that, how to code the 9 EMA trading strategy, and see if we can get maybe a code like we have with the 920. I really like that 920 code. Man, it makes life easy. Makes it really easy. Then you just sit back. Theoretically, Tina, you could set up alerts. Get your TradingView alerts going. Use that Pine connector. Go with your alerts on TradingView and have it execute on your MT5. The only question I would have is latency. If you're hooked up to a VPS, you probably have a great chance of reducing that latency. All right, the trade's starting to go our way. We're still watching paint dry, though. But you guys see the flow and the general idea behind these trades. Find out when the market's out of kilter relative to where it's been. Our RSI tells us that. And then we get our trigger. That's when we go hot. That's when the safety's off and we go hot. And that's when the bar closes above the 9 EMA. That's what gets us into the market. When we set up these trades, our stop loss is fairly obvious. Our profit target has to be at least a 1-to-1, or else over time, you won't win. It's going to be very difficult to overcome the losers. All right, let's see. So I hope that helps a little bit, Tina. Yes, sir. Good to see you. Yes, sir. Welcome. T Marina, yeah, I've actually just been using the 920 with success. Just paper traded a 20 EMA on the daily with a little success. Thanks for your feedback. Absolutely, T. I really like the 920. It was a strategy I wasn't overly familiar with until we did the work on it, but dialing the time frame and the market in, I've been pretty impressed. I mean, we'll look at a few 920s here in a second. Let's see, T Marina. I believe Algo Builder can handle that, or send a webhook to the MT5. Yeah, it should work. Yeah, Tina, if you have a VPS, that could get you up and running. Look at this. We might actually get paid off on this one. Let me see. Okay, actually, that's funny, T. Hey, Tina, can you share any info on how you set up your VPS? I'm actually just made a video on that. That's going to be out in Switch markets probably the next month or so, maybe next week. I don't know what the schedule looks like, but I just made a video on that. So if you're with Switch, it's pretty easy. You just go and ask them, contact the support. They send you some emails, click a link, and set you up and get you ready to rock. All right, so in any case, you can see this trade sort of went positive for us. Let's find something else to do, though. I'm kind of getting bored with that. Okay, so right here we've got the YM. This is going to be your E-mini Dow. I love futures. I'm a futures trader just because you can avoid so much chop. I really like the 30-minute, but take a look at what we've had here develop. This is beautiful stuff, guys. This is about 20 minutes after the U.S. Open. You're seeing this big rally. The market's in overbought territory. It's overbought. It's overbought. It's overbought. It's overbought. You're still in overbought territory, and there's your close. There's your money. There's your money close. And I mean, that's just a beautiful trade. That's one of those that you just dream of. There's your close there. Beautiful. There's your stop loss up there. And look at what your profit target. I mean, just that's easy. That's easy. Very, very nice. That's what I like to see. That's how this strategy is supposed to perform. Now, let's go ahead and get rid of it. 5-minute chart. Are we even in the ballpark of making a trade? No, we're not. No, we're not. Why? We're not, we're sort of back towards the 50-yard line, the 50-50 level of that RSI. We were almost beneath 30, but not really. That's going to be a real challenge for us to capitalize anytime soon on this 5-minute, maybe later in the day, but right now, probably not. But we are seeing some volatility. You can see the 5-minute bars are moving pretty good. Let's go ahead and take this down to a 1 minute and just see, just for giggles. All right, so right there, you could see you were sort of in oversold territory down in this zone. We were beneath 30. So then right here, you would have been looking to grab a buy, and that would have been your buy. I mean, it's a fantastic move. It wasn't the easiest trade in the world. Came back against you, but you really got a real sweet rally there. Pretty good stuff. Pretty good stuff. What are we doing right now? Yeah, we're not quite above that 70 level, so you're not really going to be looking for that trade just yet. But right now, we're almost to the point where we're looking to sell. Interesting stuff. One thing I would point out too, you'll notice that we're sort of mixed. We're sort of mixed here on our U.S. equities indices. The Dow's up, and you'll notice that the S&P and the Nasdaq are down. Let's go ahead and give me a Nasdaq futures, even a Nasdaq. This typically doesn't disappoint. I think that if you wanted to scalp any of these on real short time frames, NASDAQ's probably going to give you more trades just because it's volatile. Something like this, though, this would have been really great. We would be looking to take the short. We just didn't quite get there. We were at 69.03, and that's not good enough. We got to be above 70, and now we're coming back down into the zone where we're going to see price probably fizzle right around 50. That's a 1-minute chart. All right, let's go back to our Euro USD. It was sort of in the money. We need to make another leg up there. We're going to be there a while. What else is on the move here? Let's go to gold futures. Let's go to gold futures. 1-minute chart. Not the best time to be trading gold futures, to be brutally honest with you. Typically, this time of day, the game has slowed down. It really has. But something like this, you'll notice that's a big sweep of volume. 709 contracts in a minute this time of day. That really produces a large range, and it is really difficult to figure out which way the market's going. Right now, you see gold's up about 0.38% on the day. Not really going much of anywhere. I'm watching this closely, but I mean, the 1-minute chart is, are we going to have a chance potentially to sell this thing relatively soon? Well, we're sort of trending a little bit higher here, 61.86. We've got to get up above 70 before we can look to sell, but that's essentially what you'd be looking to do here. Get another big run, or not a big run, but just have this thing tick a little bit higher, and then you're going to look to take a sell if it develops. Remember, the indicators are there to keep us out of trouble. That's what they're there for. They're there to keep us out of trouble, and right now that they're doing just that. Did we have any trades earlier today? Gold futures has just been sort of log jammed. You'll see sort of back here, right? Early U.S. session, you had an opportunity maybe to sell. I'm up in this zone. I mean, it turned out to be a great trade. I mean, that would be the setup. Overbought, you're looking to sell. Your sell would have been right there. Boom. Did you nail it? Yep. Have you got a trade since then? Nope. On a 1-minute chart, that's why you definitely need to be rocking three or four of these products. Okay, so here we go. Now we're starting to talk a little bit. Now we're getting into range where we may, in fact, get a trade on this gold contract. So we just went out above it, 71.31, right there, 71.31. We are in overbought territory, so we are now in the kill zone. Kill zone means what? It means that we're waiting for a bar close beneath the 9 EMA, and we're going to go ahead and send them south. So let's go ahead, pull up our orders thing. We're going to go sell. This is going to be a market. I'm going to go ahead and rock a 4 lot here, and we're going to go look to sell. Now, one of the things that people ask me a lot about RSI, and I've built some strategies and ran them through Algo Builder, and they were successful, and it was just basically playing the RSI from one side to the other. So you're looking to buy oversold and you're looking to sell overbought. That can work. Low enough time frame, given the right stop losses and profit target amounts, it can work. The problem you run into with people that say, okay, now we're in the 70 zone, we're above 70, this market's overbought, let's go ahead and sell it right now. The problem you have with just playing an RSI is if the market decides to trend, as we're seeing right now in gold, when the market trends, oftentimes you're out to lunch because you're selling into the teeth of a strong trend. You don't want to do that. And that's one of the reasons why people have lost fortunes trading RSI just by itself, is because when it trends, you just get eaten up. The market keeps going and it doesn't ever turn, and you're just deeper and deeper and deeper into overbought or oversold territory. That's by nature what a trend is. And if you read Wells Wilder's Jr.'s work, like I have, he will tell you that. He'll say, listen, you got to watch it. What we look to do with this strategy, with your RSI, is we're trying to establish a stop loss location. Think about it. That's all we're trying to do. So right here, we're in overbought territory. We've got a beautiful rally. I'm loving the swing high setup. So when we get this swing high to set up right here, we're going to be in overbought territory. That's going to be the area where I say, okay, if the parameters, if things line up and I get my sell, I know that if I don't go down and get my points right away and we take out that swing high, we are going to trend higher. Market structure will be broken to the top side, and you're probably going to make another leg up. That's fine with me. At least I know where I have to get out of the market. That's the power of the RSI, in my opinion. You look at it and you say, is it good for trade entries? I think it's worthless for trade entries. Is it good for stop loss locations? Yes. It can tell us where we need to put our back. We're putting our back against the wall, saying, okay, this upward pressure is done right here. And if it's not done and the market goes higher and higher, we're out. We'll come right back and we'll look to grab something later in the day. It's that simple. That's the way that I see it. Another thing, look at the sensitivity of this 9 EMA. I mean, this is a very sensitive moving average. I mean, you just bounced right off of that. I'm loving this price action, though. We have an opportunity potentially to get another trade, and I'm very interested. I would like to get this so we could set this up. I really like trading gold futures. Like I said, I've talked about it a lot. I had a bad day last summer, and it was a bad one. But by and large, gold futures have been one of my best products for quite a while now. Just a lot of action, a lot of money flying around, a lot of action, and it really is a lot of fun to trade. It can be a lot of fun to trade. Get your juices flowing, that's for sure. Let's see. Let's wait. Let's let this one simmer for just a little bit. If we get a little close, if we get a bar close beneath that 9 EMA, we're going short. Or we've already met our conditions. Quick recap, right there. That's the peak we're looking for. Overbought territory. We're looking to sell this thing, and let's see if we get a chance. 20 seconds left. We might get it. All right. Let me see. Absolutely, T. Let me see. Nat Niles. Hey, how you doing, Nat? Welcome. Always welcome, guys. Everybody. If you have any questions, then I'll be sure to ask. Let me see. I'm going to need gold. Let's see. Yes, sir. I'm going to need gold to give me my take profit at 40.30. It's possible. I mean, if you're long, you're probably right. Yes, sir. I mean, you know what you're doing trading gold. But I thought that going long yesterday after that pullback on Jay Powell's comments, every time the man spoke, he tanked gold. He did. I mean, we showed it. So I think buying on yesterday's pullback was a pretty astute move. It was not stupid. You didn't get really the big trend you were looking for today, but it's still a pretty good move if you got good trade location. 30 seconds left. All right, we have an opportunity potentially to trade here, which I like. That's why we're here, is to trade. Let's see. KUH, can you explain how to set up the RSI, and is it the same on all time frames? Yeah, we'll set this trade up. KU, it looks like we're going to be live here in a second. I'll set the trade up, and then I'll show you how to go ahead and get that RSI going. I showed you a little bit earlier, just review the webinar, but essentially what we're doing is keeping all the settings the same as the factory settings, and I'll show you what I mean. All right, this looks like it's a go. 5, 4, 3, 2, 1. All right, is it in? Is it in? Is it in? Is it in? Give us a print. All right, we're gone. Okay, so there's our sell. My stop loss is where? Right up above the swing high. Be sure to shade it a few ticks. That's very important. Our take profit is where? It's got to be at least a 1-to-1. So this is another big trade. We put 4 lots on, which, believe it or not, I've been known to trade 4 lot blocks of gold futures, and sometimes it's very good. Other times it can be a challenge. One of the things I like about the futures markets is watching the trading DOM. It's something that I've done for a long, long time. And you'll notice right here, a little bit of action. You got a little bit of action. Here's going to be our entry point. We got short right there at 16.6. This thing's gone against us a few ticks, so we're not necessarily doing very great, but these ranges are pretty good for a 1-minute bar. You'll notice that our stop loss is right up here at 21. So this is a significant trade, and then our profit target is going to be down here right around 40.12. So 4,012. So to me, we're looking for about a $4 shot. I think we've got a chance here. The volatility that we're seeing is pretty good. Not the best time of day to be doing this, but it's not a bad time of day either. There's enough action here to where we can generate a little bit of money. I think we're going to make a little bit of money. I really do. I think that it's not a bad trade at all. And now what we're starting to do here is see a little bit of maybe, hey, we went positive, right? I don't like taking heat. I like it when these things break directly in our favor. The participation rates aren't great. The volumes aren't great, but here we go. Now we're starting to talk a little bit. We want to see this market open up to the downside and give us a real opportunity to make a few bucks on really a reversion. I mean, look at all these price bars. There's bidders down here, but we've got a chance. We've got a chance. All right, let's see. Back to your question. KU, can you explain how to set up the RSI, and is it the same in all time frames? RSI is relatively simple. Here on TradingView, you're going to go right there to indicators, go down to relative strength index, something like that. There it is right there. Click on relative strength index. That'll get you up and running. And then just a quick look at our settings. Our settings are going to be factory settings. RSI length is 14. We're going to keep it there. The source is the close. Type is SMA, and don't really worry about the rest. Keep it all the same. 14 and close. That's the most important thing. Those are the factory settings there for that. Okay, so right here, we know that we're in big trouble. All right, we're going up there. We're going to eat up our stop loss. Where's this swing high? The swing lies at 20.7. I'm up over there around 21. I think that our stop loss, we don't need to move it. It needs to stay right where it's at. Now, the market has reversed against us, which is not uncommon when we're talking about how to do business here with scalping. We're talking about 1 minute time frames. The volumes aren't that great. Right there was probably 709. They're just really low volume. You'll see earlier in the day, we had much higher consistent volumes, about 400 or 500 per 1 minute bar. I mean, that's absolutely hot. And you can see the big moves back there. But this is a pretty good illustration of how to take a loss, it looks like. So last thing I'm going to say about it's this. We're going to get stopped out, almost guaranteed. The biggest thing to remember about scalping is your first loss is your best loss. Don't start moving your losses around. Don't move your stop loss. Take the loss. Step up and take it. You have to. Because if you move your loss, think about what you're doing. If you say, oh, this one just needs a little bit more room to work, and we'll get that rotation back down. Maybe you will. 9 times out of 10, maybe you do. The problem you run into is if you start moving that stop loss around, you're potentially caught with a short position. You've taken a position on a 1 minute chart on a day where gold is trending higher. Okay, we got stopped out. I want out of this thing. I was pretty confident we were going to make a few bucks there. I want out now. I don't know where the market's going. I don't know how high we're going. We could go anywhere. We could go to 40, 50 today. I don't know. Bottom line is, I'm done. I'm not interested. So we just took a loss there. I am in no way, shape, or form interested in getting back in right now to the short. This thing has to set up again perfectly. And you'll notice, right? I mean, let's put our stop loss up on the board. Or was it somewhere right around there? If you're still holding shorts, you're in big trouble. You're in big trouble. You have to get out of those trades. That's what separates the winners from the losers. You got to know when to cut them off and stick to your guns. Nobody likes losing. I don't. Euro USD, this one's doing a little bit better. We can see that one's going to go up and probably touch our profit target. So we'll have a legitimate chance there to cash out. We need about, another pip, 0.7 of a pip. Once again, the leverages. Don't worry about the leverages. These are demo dollars. 1 to 3% of your account balance. I don't recommend going 5%, but I would be somewhere around the 2% level because you're going to take a lot of trades, especially if you're trading multiple contracts or products. All right, guys. That's a look at the 9 EMA with confirmation scalping. We didn't do very good today. It looks like we'll get the Euro USD trade home, but this gold trade didn't work very well. That's going to be the nature of the beast. You're going to win a lot and you're going to lose a lot. That's for sure. So I hope that helps KU on setting up the RSI. If there's no more questions, we can go hunting for another trade, I suppose. Let's see, NQ. All right, U.S. equities are sort of flat right now. It's going to be tough to get a futures contract to play. See our RSI is all around 50. That's not going to work for us. We need something where the price is out of whack. We need to see it out of whack. Let's see, what else do we have here? WTI crude oil, we can certainly look at this. We're starting to move a little bit higher, so potentially you could be in overbought territory here in just a second. What are we printing right there? About 67. So if you make another bar up, potentially we could be in position to take a short here on crude oil, which would be, this time of day would be just fine with me. I wouldn't have a problem with that. I see a lot of flat price action and a lot of things that aren't necessarily adding up with regards to directional moves. Core PCE tomorrow. Trump G meetings. There's all sorts of stuff to cover. All right, guys, let's check in on one of our other things that we put out earlier this week. I did get a request to look at this one in the private messages earlier today over at How to Trade, and it was our 920 EMA crossover. Coded 920. This one wasn't. We're looking on the natural gas market if we can get it to load up. You see back there, fantastic play right there in gold 1 minute ago. I mean, look at getting out of that trade really saved our bacon. Believe me, take it from somebody who knows. When your stop loss gets hit and you're scalping, get out. Don't walk out of the trade. Run out of the trade. All right, let's go right here. I do want that natural gas. I want natural gas on the daily, and this was a swing trade. And you can see that things are starting to look up. Topside target's still up there about 4,000, somewhere in there, 4,004. 4, somewhere right in that zone. You can see we're trending higher. A little bit of a pullback, real stagnant week. A lot of it had to do with the trade wars and the negotiations. Trump's trip to Asia definitely has been all over the natural gas market. But now you're starting to see that bullish rush that I think you're going to get here as we go into the weekend. That's for sure. All right, guys, let me see. I got another question here. T, good to see you. Wow, exactly what I did with my 920 EMA daily time frame trade. I got tightened my stop loss. I tightened my stop loss using the 1 hour time frame. It got triggered, but my original stop loss was never reached. Wound up losing the trade. Well, I mean, the short time frames are problematic in a lot of ways. If you're going to attack short time frames, you buy them in bulk. You go after it in bulk. You make a lot of trades, attack a lot of markets, and just look for that law of large numbers where you have a small edge and you apply it repeatedly. And in order to do that, you've got to have your leverage low and you've got to be able to take a lot of trades. And I'm not going to kid you guys, it's exhausting. I started out as a scalper. We were scalping 4 different markets on 5-minute charts using a proprietary system. There was a scalping system. It was really hard. I mean, 4 or 5 hours a day is what we were trading. Started about 7 a.m. my time, be done about 12:30 in the afternoon. 5.5 hours, steady, 4 markets, 4 screens, trying to do it all. And a lot of days you just felt like you were running in place. And a lot of days the slippage really got us. That's for sure. Definitely a loss to study. I mean, this is what it's all about, though. I mean, when you took your stop loss, did you lose or did you win? Well, price is now about $6 higher, $5 higher. That's 50 ticks. And we were playing for what? We had 4 ticks out there, $40 a tick. So what is that, $2,000? It's time to get out. We got in. We didn't quite get our follow through there. We got a pretty good move right there. And at this juncture, I was thinking, boy, we could easily sell off, and it didn't happen. Now the bidders are involved. Gold's going up, and I think Yesser is going to get his profit target. That's what it looks like to me. So absolutely fantastic stuff if you're long. Now you start to see the market explode to the top side. Danger. I mean, you should get chills when you see the market just destroy your stop loss like that and go against you. You should actually say, wow, my system, my strategy just kept me from losing the ranch. That's what it's all about. All right, everybody, I'm going to go ahead and sign off here for a few hours. We'll be back tomorrow. Inflation Watch trading the PCE price index. I'm going to go ahead and have a recap for you. Everything you need about the PCE. We're going to talk Trump. We're going to talk Trump G. We're also going to talk government shutdown and what the EBT cards becoming invalid and not being funded. There's a couple emergency measures on the table. We'll see if we get a deal done in the next day. But those really serious things happening here in the United States. The EBT stuff's going to be a big deal, and it could, if those are allowed to expire, 42 million Americans aren't going to get benefits, and there's going to be trouble. So I'm watching that closely as being a potential market driver for gold tomorrow. There's going to be some money going into safe havens, I believe, if they don't get a deal done going into the weekend. Also, there was announcements today of new nuclear testing. I believe Trump okayed underground nuclear testing, which, oh boy, there's a lot of things going on now that really speak to the top side of the safe haven market, and you're already seeing it there. So, did we get our money? Did we get paid off here? Euro USD, did we get it? All right, winner, chicken dinner. So, there was a nice little scalp there on the Euro USD. We lost this one badly. If you have your risk dialed in, you should be somewhere around even. But if not, that's okay. The big thing is you just get out of those losing trades when you lose them. Don't let them run. If you don't take anything away from this webinar, don't let them run. You let losses run, you're not going to be in business very long. All right, guys, that's a wrap. I'm going to go ahead and sign off for today. If you have any questions at all about the strategy, go ahead and leave them below this live stream. I'll be sure to answer all the comments on our YouTube channel. This is on Switch Markets YouTube. So if you feel like leaving a comment or a question there, go ahead and do it. I'll usually get back to you same day or maybe a day or two later. And then if you need to talk right away, head on over to the How to Trade Trading Room. Send me a private message. I will be sure to get back to you. Any question you want to ask, I'll do my best to answer. If I don't know, though, I will tell you I don't know. And sometimes a guy just doesn't know. And if you don't know, you don't know. And a couple of rules on this stream. Number one, if it makes money, it's the right answer. Number two, if I don't know, I'm not going to sit here and fib to you. Number three, what is that? Learning. Learning is always cheaper than losing. We do learn from losing, but boost your trading education and IQ as much as you can. Don't just jump into the markets with real money. Losing is expensive. Learning's pretty cheap. Just take it from me. Believe me. All right, guys, I'm going to go ahead and sign off. Have a fantastic day, a better week. We're going to be back tomorrow talking inflation and core PCE. Any questions you may have for Friday are fantastic. It's been a good trading week. Tomorrow's going to be even better. All right, have a fantastic trading day, weekend. Trade the action well, and we'll talk soon. See you.